All right, Joel, good morning. This is Nev with One Deal Away, and it's about, I don't know, 6:30, 6:45 Eastern Standard Time, so New York time. And I wanted to do this. I've never actually done a video this early for anybody, but I'm doing it for you because there's something rather interesting that has happened. This is uncanny. And so I've already done a little bit of an update of what has happened with the Fed. I'm going to use a little bit of time to explain that here to you. And I'm going to talk about sort of what we can expect for the stock market for March 16, 2020. That's right. I'm doing this pre-market job. Okay. So how am I able to do that? I don't have a crystal ball. I don't have like best friend at the Fed or working at Wall Street or any of that stuff. Really, my ability to look at some stuff and sort of consider what I think the day is going to look like has to do with futures. So if you are interested to start looking at this stuff for yourself so you understand of where the direction of the market is going to go, you're going to look for the futures. There's actually nowadays a lot of articles that you can read. There actually is a website where you can go in and watch and see what happened, but that's really even though it's not 100% correlated, it's a really good predictor of what is more likely than not to happen. So even with me sharing even with me sharing with you of what I think is going to happen in today's market, in today's paper assets, uh, that doesn't mean it's 100% accurate because most of these things are based off of what has transpired during the pre-trading, during that futures component, okay? So, what happened? Let's try to kind of catch you up because a lot of things likely have happened and you might have been busy trying to take care of the kids and the family. You might have been busy being bombarded with the corona. You might have been busy just trying to make things work, okay? We have a lot of stuff happening and a lot of things are coming our way. So I'm going to try my best to take a little bit of your time this morning to explain sort of what happened here. Fair? So the Fed actually went out and cut interest rate down to zero. Now, last week, almost to the week, no, because this was an emergency meeting held on Sunday, y'all. So if the Fed is doing something on a Sunday night, it means it's an emergency, okay? So it's not a small thing. That's number one to keep in mind. Number two is they've already cut interest rates 0.5%. So we've already had one cut of 0.5%, okay? So that was number one, and that was what, like a week ago, 10 days ago, something like that. I could probably scour the internet and find out the exact date. You actually can do the same thing. So that brought us to about 1 to 1.25%. And the reason that there's a range is because they do something different depending on who you are. Shocker. I know. All right. So now, for them to bring this, for them to bring this down to zero, that means there had to be another cut of about 1%. This is unheard of. This is uncanny. This has never happened in recorded history of financial centers that I know of. I could be wrong, but I don't think I have ever read anywhere, seen anywhere, heard anywhere of a central bank dropping 1.5%. 1.5, because zero point 0.5 plus 1% that just happened last night. 1.5% in like, I don't know, 2 week span, or let's call it a month. Let's be very generous, even though it hasn't been a month. It's only been a couple of weeks. So the sort of the downward spiral of the stock market has been happening for about a month now officially. The highs for just about all of the markets, so S&P, Dow, Industrial, as well as NASDAQ, was all recorded roughly between like February 12ish and February 15ish. Like that's kind of the range. So that's when we were at the high. We are now, today is March 16th. I checked the calendar this time around. Today is Monday, March 16th. And we have dropped. We had a nice little rebound. So if you watch the market, you'll kind of see something like this, like this, like this. There was like a little bit. This is that February date that I was telling you about. And then it just kind of did this, and this, and this, and this is where we ended on Friday. Okay? So these that you will see, these sort of like bounces, in trading world, they're called dead cat bounce. Why they call it that is anybody's guess. I got nothing, y'all. I have no clue. I'm just telling you what it's called. That's basically that fake out that I was talking about, where it goes down and then it has this like up, and you're like, yeah, it's going back up. I'm gonna buy, and then it just switches on you and it just drops, and that's very, very normal, very typical for the bear market. So it will look something like this. You will see it go down, you will see it go up. Sometimes it actually might even go up slightly from the previous, and you will really think like, yeah, this is turning around for me. And then the next day it just does this and it nosedives. So that's kind of where I think we're going to go in today, is going to be a bit of a nosedive. So get ready for that, because I think that that's what's coming. So the second reason that I think that that's coming, hold on, let me clean up. I figured I needed a little bit of room to work around all of this stuff. All right. So the second reason that I think is going to do the nosedive today is because as soon as the Fed has announced the zero rate, which I have raised, and I'm keeping this because I need to explain it, the futures have opened. I don't know what they expected at the Fed, to be honest, because when I, as an investor, as somebody who sometimes comes in to trade, I won't lie, I go and play, okay? Sometimes I win, sometimes I lose, but I no longer call what I do in Wall Street investing. And that small distinction was very, very important and very crucial to my being okay with what's happening and understanding. It's one giant game of Russian roulette, so to speak. And sometimes you win, sometimes you lose. But because of the knowledge I've acquired, I feel like I'm much better at understanding what's happening and being able to play in the markets, even though I don't have an up day every day. Like I don't, I'll be very honest. But here is when I see them do that, I'm not thinking, oh, it's going to be hunky-dory. No, I'm thinking people are going to freak out. You just cut rates 1.5% in a matter of a couple of weeks. Yeah, people are going to freak out. And so that's why yesterday on Facebook, if you have watched it, I have called for lower stock market to go down. I have called for high volatility. I have called for bonds to go up, and I have called for gold to go up. And this morning I went and checked the futures, and guess what, y'all? All of that happened. All of that happened, and it's not because I have a crystal ball, because I am thinking strategically through it, okay? So what happened in the futures? Okay, so the Dow, okay, the S&P 500, and NASDAQ, okay? So the three biggest things, all three of them went straight down today, okay? In the futures market, and they actually went down well over 5% the moment that they opened, or right around 5%, to the point where they actually hit what they call limit. And limit basically is a technical term that is put in to sort of prevent this 1929 crash. Okay, that's what this is designed to do. Because if it wasn't for this, so basically it opened and within minutes it shut down, and that was that. The trading in the futures was done. So what I expect to happen inside the stock market today is I expect for the equities, I expect them to have a drop, and I'm going to say it's minimum 5%. I am actually thinking 10% plus. Now, if it hits about 10-15% or so, there's going to be a pause in trading for about 50 minutes. If it happens again, it's going to be another one. It's going to last a little bit longer. If we hit 20% drop, which is not impossible given what has happened at the futures, given what has happened with the Fed, they're going to shut down trading for the day. So, and right after that, it wouldn't shock me and surprise me if there's some sort of stock exchange holiday or a couple of bank holidays. So that's kind of where we find ourselves. And I've already explained, they call it holiday, and all it is just a closure, but they don't have a good name for it. So they got to call it something. So that's kind of where I think is going to happen. All right. So something to keep in mind. Bonds. I think bonds are going to go up. So there's going to be a rally or a bull kind of happening in the bonds. And the reason for that is because out of this $750 billion stimulus that the Fed is releasing, 200 billion is going to go towards mortgage-backed securities, so they're going to cover some of the mortgages. I think the 2008 pains and playbooks that they have dusted off and pulled it out and went through called for mortgage-backed securities. So they were like, mortgage-backed securities is. So I think that that's why they're doing that. I don't think that there's any issues with mortgages at this point, but they're just. This is all stuff that has happened that I have lived through in 2008. I just didn't know it at the time. I was being battered, left and right, up and down until I sort of like emerged, brokered and broke, feeling beat up and feeling completely not understanding what's going on. And that was a wake-up call to say, I gotta figure this out, man. This is not okay. Like, if this is how we're gonna play, I'm gonna have to go and work out and get a little smarter, okay? So, the $500 billion treasury is $500 billion is what they're buying our treasuries, which is basically bonds. So that's where I think that area is going to go up, okay? So that's why, because they're already buying, creating more. So we know they're going to print money. And remember, when they print money, bonds tend to do pretty okay. So bonds will do pretty okay today. I think gold will go up. And just to be clear, futures, this actually did go down. Bonds, this did go up. Gold, this did go up in the futures market, and I think it's going to go up in a regularly scheduled trading timeline. And that's because, when people get a little bit panicky, a little bit freaked out, a little bit worried, they run to the safety of the gold. And so we will see a lot of people doing that stuff. I have already been recommending to folks to get into some gold. You don't have to bet the farm on it, but you should have some. And if you don't, I don't know what you're waiting for. I'm not selling it. I got nothing to sell you. I just other than education, I guess. So that's it. That's all I got. Is I just want you to learn so that you can protect your wealth. That's it. It's that simple. Because I know how painful it is. Because I've gone through it myself, and so I just don't want you to do it on your own. I don't want you to lose everything, because that sucks. I'll be very honest. I don't recommend it to anybody. Okay, so gold will likely go up. My understanding is, I didn't know this, but oil actually has dropped in the futures. So what's going to happen in the live trading piece, I don't know. It potentially could drop as well. So that's the piece that I really don't know. Volatility, definitely up. Okay, I've already called for that last night. So volatility is going to go up. So if you decide you're going to go and play in the markets today when they open, go for it. Be prepared of what sort of makes sense and the direction thing is going to go. I honestly believe that Dow, S&P 500, and Nasdaq will open well below Friday. So don't expect that Friday high to stay there. What I think is going to happen is you're going to have, right, this was sort of like that Thursday, this was Friday, And so it's not gonna open here like most people think. Oh, yeah, you can see that. It's gonna open like here and then just sort of go down. That's kind of what I think is going to happen. I could be wrong, because like I said, I can always say I don't have a crystal ball. Mine broke years ago. I am just using life experiences and sort of things that I have learned from books and attending things and reading and studying and looking at the history to have a bit of understanding of what more likely than not can happen. So all of the stuff that I have shared here with you is not a guarantee. It's not 100% proof. I don't hold me to it. I'm just sharing with you what I think is most likely to happen and what also has happened over the past weekend, as well as uh, late last night, early this morning when it came to the futures. When it came to the other areas, Europe, just about everything is down. Just about every uh, market inside Europe is actually down, which is not a surprise. We are dealing here with coronavirus in the United States. They are truly being battled all over the place, and looking at some news reports and images and speaking with family and friends, it's like living in a war zone right now. So, however bad we think we have it here, I think we still have it good. Do I think it's going to come that way to us? I don't know. It's anybody's guess, but it's possible. It's possible. It sounds like every major country that didn't take this seriously at the beginning is taking it seriously at the end, and I'm afraid that the United States is going to be there. A lot of people kind of joke about it and make fun of it, and I'm not saying create mass hysteria, but to not understand the impact that this pandemic has, you're a fool. You really are a fool, because look already what it's doing to the markets. And I am afraid that this has just kick-started what we've been waiting for a little while, and this is not going to end well, as they said. I mean, things will end well, right? Things will always end well. There's always going to be opportunities, but it's not gonna, this is not gonna be one of those things where we wake up and by April 15th, like everything is gonna be peachy. It's not gonna be that way. That's not gonna happen. So I think that we are going to, everybody is now calling and saying, we're officially in a bear market. I'm going, we were officially in bear market a little while ago, but thank you. We're actually officially in recession, but again, nobody can call it a recession. They can't call it until we've gone through this stuff for 2 consecutive quarters, y'all. 2 consecutive quarters of this kind of stuff will completely decimate your money. So if you have not done anything with your retirement funds, with your 401ks, 403bs, IRAs, all of that stuff, I don't know what you're waiting for. You need to reposition now. And I'm not trying to scare you. I'm not right. Like, I'm not saying sell it. I'm just saying reposition it. Get out of equities just for a little while, right? You don't have to do this for forever. You can always put it back in when this puppy calms down. But what you're trying to do right now is preserve the wealth. And I know people said, well, as long as you stay in the market, on average, it goes up 7 to 8% per year. Yes, and this is a year that makes that average possible, because market will go up, it'll go up, it'll go up, it'll go up. But we've been going up, y'all, for what, like 11 years now, 12 years, whatever, something like that. And at some point, it has to come down, because equities, also known as stocks, are highly overpriced. They're highly overvalued. And I will make sure to do a video where I talk about the whole, like, how does it go from overvalued to like fair value? Like, how does that trajectory work? How did that work in history, so that we can learn of what happened before? Because if it happened before multiple times, or every single time it happened the same way, the probability of it happening in the future is pretty darn good. and it's not guaranteed, right? It's never 100%. Nobody can call it that, but it's pretty darn good. It's kind of like, right, like if you have a kid or a cat, either one will work in this case scenario, maybe even a dog, right? There we go. Let's open it up to even more people. And, you can, as a kid, I've always wondered, like, how did mom know that I was about to do this? But now as an adult, when I'm watching kiddos, I'm watching the kitties, I'm watching the puppies, they signal. We all signal what we're about to do. And so when you see that I'm about to go do this, you know exactly that I'm about to go right on the wall. So that's why the moment you see my hand move with the marker, you're like, don't you dare right on the wall. You're like, what? How did you know? Because, right, it's the previous experience. It's the same thing with this, guys. Just because it's numbers, just because it's money, just because it's the markets, humans are humans, and we behave in fairly predictable way, although we could be quite erratic at times, which is what makes it a bit more complex to say, no, 2 plus 2 equals 4. Well, yeah, great in math, yes. When it comes to humans, not always. Sometimes it's 22 and sometimes it's 0. I don't know. It's fuzzy math, okay? It's fuzzy math. So I hope this is helpful to you and that you will definitely take some action for yourself. I'm not saying go out into the market and play, but do look at your portfolio of what you have, reposition a little bit, and really strategically think through of what makes sense for you and your money. All right. So I promise to keep doing these videos. I don't know that I'm going to be able to do every one morning to sort of prepare you for the trading, because Lord, I should probably start charging for that, because that's a lot of work right there. But I do want to be able to keep you updated as much as humanly possible, because remember, this is not my only gig. I have so many other things happening, so many balls in the air, from personal business and clients, to my students, to regular scheduled work, to personal life, to dealing with family. All of my family is in Europe, so that's creating a lot of stress and pressure on me personally. It's creating a lot of stress and pressure on them, and there's nothing that I can do for them at this moment. So that's the kind of really sucky part. But here we are. So until next time, stay forever money blessed, and do remember, you are only one deal away.